You are listening to ChartingWealth.com for Thursday, the 26th of January, 2017. Let's jump right into the charts. SPY, which is the ETF that represents the S&P 500, is up for the day 0.83%. What do we see going on our two-day chart? It is trying its darndest to cross over going up, but it just hasn't managed to do it yet. What we do see, though, is, of course, our weekly chart crossed over back on the 28th of November and ran up for a while and then really has been sliding sideways. It's just now, over the course of this last two-day candle, risen above the high that it hit all the way back on the 14th of December. So we do see the S&P trying to climb up again after sliding sideways, lots of indecision as far as those two-day candles go, but we still don't have that crossover. We just have seen so much of a sideways slide that what it has done to the mathematics that controls the price percent oscillator is it really caused it to slip sideways and drop, and it's now trying to cross over going up. The derivative oscillator has turned positive, but the PPO, the price percent oscillator, not quite done that yet. But much better news, my friends, if we move on to the Qs, which is the NASDAQ 100. What did we see happen? Those of you who follow us know that the Qs crossed over going up on the weekly chart all the way back on, well, the week ending on the 6th of January. The weekly chart crossed over. Now, if we go way further back to the 8th of December, we had the two-day chart crossover going up. Remember, the smaller chart crosses over first. Then, of course, the two-day had enough pull-up that after it had risen and then dropped a little bit toward the end of the year and then picked up again, it pulled the weekly over that week ending the 6th of January, and we've seen the NASDAQ 100, as represented by QQQ, moving up strongly since then. Unlike the S&P 500, which had been dragging sideways. And then, of course, what did we see happen? We go to our 2-hour chart. We saw at 2 p.m., actually after the 12 p.m. candle, on the 24th, we saw the entry point at 124.10 trigger. That was your entry time. The highest, worst place you could have gotten in, 124.10. Could have gotten in lower than that, but if you jumped in at 2 p.m., that was the trigger entry point. We've seen the market rise considerably since then. It's gone from 124.10, the worst entry point you could have gotten, all the way up to a high of 125.46. So again, not bad at all for following our method just over the course of a day. What are we doing? We're trend following. Now, are we stock calling for you? Are we giving you trades? No, we are not. You don't pay us for that. We don't offer that. We don't do that. We're an education firm. We want you to train with us. We want you to listen to and train with us, go through all of the trainings that we have. First thing you do, subscribe at ChartingWealth.com. We will send you for free with your daily video podcast. You will get what? You'll get our How to Read a Stock Chart video, 15 minutes you need to listen to so you can understand what the MACD or price percent oscillator is, what the derivative oscillator is, what trend lines are, what candlesticks are. You'll also find individual trainings at our website about things like the Heikin Ashi candlesticks that we use, about how trend lines are formed and used, what the PPO is, what the MACD is, what the derivative oscillator is, what Bollinger Bands are, volatility bands, how to draw trend lines, what all the things are that we use. 15 minutes of greatness. We ask you to make sure to subscribe to our channel and listen to that. Subscribe to chartingwealth.com. First name, email address. You'll get not only our How to Read a Stock Chart video link, you'll also get our daily market worksheet. If you want to supercharge your training as you listen to us every day, you fill out that daily market worksheet. Why? Because there's something magical about putting pen to paper. You don't sit there on a computer and type it all out. You sit there and manually, as you listen, you draw things, you write notes, you jot stuff down. It's magical, and you keep that in your own little trading notebook. You will find if you do this on a daily basis and you do it while you listen to the 10-minute podcast, at the end of that 10 minutes, you've really thought about what it is you're doing. You've manually put that information down, and I'm just telling you, you can ask the people who teach, you can ask the folks who've gone through training. There's nothing like manually writing that stuff down. And in the sense of accomplishment, when you get a thick binder where you've done this for months on end, you will supercharge your training. You'll also get our you'll also get our layout that we use at freestockcharts.com, the layout that you see on our videos. Now, those of you listening on audio, we will explain to you everything that's going on. We'll continue to do that. So that's where we are as far as the cues goes. It is beautiful to see what's happening. The other thing that's beautiful to see what's happening too is the thing that we have discovered doing backtracking and tracing. And we start seeing our weekly chart. We talked about this at the end of the day yesterday when we did our video. We have seen over and over again that when our weekly line crosses, you are in good company to look at jumping in that following Monday. Remember, our weekly charts close on Friday. Jumping in after idiot hour around 10:30 on a Monday, I want you to keep practicing and seeing how that works for you, whether the market's up or down, crossing over on that weekly chart. When you have that big and strong a trend, it typically bodes very well for getting into that move. Where did we get in as far as the weekly? 121.30. That jumping in point occurred at 10:30 on Monday, the 9th of January. 121.30. Guess where the market closed today? 125.36. Folks, that's less than a month. It's 20 days. And look at what the market has done. Amazing. 20 days. Hell, it's from the 9th until the 25th. That is incredible movement. Incredible movement. So, you want to learn how to read these stock charts and make virtual trades that work. And what do we mean by virtual trades? We mean you open yourself up a trading account at any of the online brokers. And by that, we mean a virtual trading account. And you start messing around with it as you listen to us, as you see openings, as you start getting used to this training, working hard. And as soon as you get good at this stuff and you develop your own sense of timing, and it may take you many, many months, may take you many, many years. It really depends on how much time and energy you wish to dedicate to what we do. But we encourage you. It's the best 30 minutes. What is it about altogether? 10 minutes a day, 4 days a week, plus about another 15 minutes for the weekly review and forecast. So all told, you're talking about, 55 minutes or so a week? Can you do that? You're damn right you can do that if it can help make you financially independent or give you retirement possibility years earlier than you otherwise expected. So stay with us. Let's keep moving through this. Okay, we're going to keep moving on. 2 more charts to look at. Going to look at the TLT, which is a 20-year bond fund. It has been driving down on the last 3 3-day candles. Remember, it crossed over on the 2-day chart going up, rose up nicely until it didn't anymore. Hit its high on the 17th of January and has now started coming down. Derivative oscillator losing energy. Not crossed over yet going down, but looks like it might be doing that. What are we waiting to see? We're waiting to see what's going to happen on the weekly chart. It has been trying to cross over going up and just hasn't had the energy. Looks like it might not have found a bottom. And remember, those of you who thought, hey, we're at a bottom, let's go ahead and jump in. Well, guess what? You may not have been. You don't have a bottom called until you have a crossover going up on the PPO, the price percent oscillator. That has not happened yet. However, where may it be happening? Which means, of course, we don't have a trade in TLT at this point. What about gold? Well, gold has crossed over. Now, the week's not ended yet, and we've seen some weakness on the last 2-day candle. Hopefully, though, we're going to see the weekend and gold still be crossed over going up. If indeed that occurs, then guess what we're going to look for over the course of the next week, the following week, not this week, but once this week ends, the following week. What are we going to look for starting in around late December, early January? We're going to look at getting into some up trades on gold. Now, lastly on gold, like we always do, let's look at our 4-hour chart. Is it starting to work again? Well, it's down now. We shall just continue to see. Those who've been following us a long time, you know how prescient our 4-hour chart has been over the past year. Stopped working at the end of 15 and at the end of 16. We're going to see it started back up again at the beginning in late January, early February in 2016. Hopefully this 4-hour total chart will start working again. We'll keep you posted. Once it does, we'll start calling it. Hey folks, thank you so much for being with us. We love to hear from you. If you have questions, problems, concerns, please go to Charting Wealth. Email us. Let us hear from you. Please also follow us on Facebook, Twitter, Instagram, YouTube. You really help us out by subscribing to our channel on YouTube. And that's one of the first places we load up all the new trainings and information. Additionally, if you really want to help us out, go to iTunes, subscribe to our audio podcast, give us a 5-star rating, say something nice about us. You guys have made us as high as number 6 in the world as far as stock market podcasts go. Thank you so much. God bless you guys. Let us hear from you. Sign up. Get this newsletter. Invaluable, free information. No bunk, no advertising. We don't sell our list. God bless you. Take care from chartingwealth.com.